At what point should you be buying life insurance or life assurance? Warren Ingram is a certified financial planner. This is the core of practically everything you do, Warren, isn't it? Is it helping people to assess what their risks are, what their liabilities are, what happens if they died tomorrow to members of their family if they didn't have cover? How do we think about this?
I haven't yet met a life assurance agent or broker that has told me that I've got enough life assurance, and certainly I've never met one that told me I can cancel, and so those can't all be true. And think understanding firstly that if you're a youngster, you have no debt, you've got no financial dependence, the only thing you've got is a salary and some expenses, but every month you've got a bit of extra money. The likelihood is you don't need life assurance. The likelihood is that you might need some disability assurance, but you don't need to protect your life. You've got no financial dependence. However, if you've got people that are financially dependent on you, whether it's a life partner, children, if you've got a business and you've got employees, then that situation is fundamentally different. And you certainly will need life assurance. And yes, you won't like paying the money, but you have a responsibility to look after those that are dependent on you.
So how do we assess what is good and reasonable, a level at which we are mitigating the risk for our family? Because, I mean, this feels like a very big mathematical calculation that has to be done. How do we get it done objectively?
I always try and simplify it as to an investment decision first. So in other words, whatever debts you have, you at a minimum you need life assurance to cover all of those debts, from credit cards, home loans, car debt if you have, etc. All of that needs to be settled. And then to work out an annual amount that your dependents need. So if they need 100,000, to cover their total expenses, and if it's children, that's including education and all of those things, and multiply that by 20. So take the annual amount, multiply it by 20, add the value of any debts that you have at the moment, and that should give you a good indication of the minimum amount that you will need to cover with life assurance. It won't cover all the intricacies of taxes, etc., but it gives you a very good sum, or very good kind of back of the cigarette box calculation. We don't have cigarette boxes anymore, but back of that matchbox calculation, and helps you kind of second guess the agents. And then my last comment is, ask 3 different agents for a quote and ask them to check on the others. To tell them you're going to check on, check their quote with another agent. You'll get a great idea after that.
Warren Ingram, certified financial planner. Thank you very much indeed. The thorny subject of life insurance. You're not going to like it, but you'll be very grateful if things do go pear-shaped that you took it out.